Today's training is on how to keep in mind different time frames and how to correlate the information they give us when we're trading, which involves holding that information before the trade, during the trade, and preparing to take profit from the trade. So it's time in the charts, and it's how you have the charts organized. And I'll start with how I have my my Ethereum charts organized. There we go. Okay, so I'll start with how I have my Ethereum charts organized. I have the first one, which is the daily pattern, where I check the impulse wave counts, the general support and resistance, and I have my daily arcs mapped out. Then I have the 4-hour pattern, where I might have a wedge, or I have a triangle or some pattern that shows itself. I might measure the fibs on the 4-hour daily pattern. On the 4-hour chart, I also have the stochastic, the volume, the regular RSI, the 20 and the 55 EMAs. And I also have some a key level indicator, again, for the general support and resistance. I don't usually turn it on, but I occasionally, when it's, you know, more how can I say, a newer, fresher territory, I'll switch it on. Now I have the daily, I have the 4-hour, both of them in their arcs, and then I have the 1-hour, and the 1-hour is mapped out. You'll see it very shortly. The 1-hour is mapped out with the volume, again the stochastic indicator, the 20, the 55, and the VWAP. So I have these on the 1-hour, because I need to see how the 1-hour is immediately responding to price action, and that's my setup. Then I have the 15-minute one, and the 15-minute one has actually the only indicator that I use is the trader's reality indicator. I find it very helpful in terms of combining volume and combining the volume and the pace of price action moving. Let me remove the drawings. Oh, no, not all of them. I'll clean it up later. So the 15-minute would have the trader's reality indicator, the stochastic, the RSI, and the support and resistance levels. So as you have noticed, I have 4 time frames, and that's my first idea for the training. If we want to keep in mind different time frames and the information they provide us, we need to be very sure what time frame are we trading on. If I'm doing 1-hour trades, because at the moment I'm doing 1-hour trades, I'm taking my signals on the 15-minute, then I am checking the background on the 4-hour and the general levels on the daily, because the daily will show me the how can I say, the higher point in the swing, or the lower point in the swing. It will show me a higher range that the price action will move in. So I need to know which what time frame I use to monitor my trades, and what time frame I use to take my signals on. I wouldn't go for more than 4 time frames initially, because you will constantly need to move between them. So you can't just go, oh, I'm looking at the 15-minute and the 1-hour and that's it. No, I constantly, when I'm trading, I look at the daily constantly, and I look at the 4-hour constantly, not only in the charts, but also on the MAs, especially when I'm monitoring the trade. I don't use the MAs for entries or exits, but I use them to monitor the swings. So when I start the day, I will look at where we are on the day. I will look at where we are on the 4-hour. I will look at where we are on the 1-hour. Map out. So the 1 hour is where I map out my my patterns, and then on the 15-minute I make the same map of the same trade, and I present it to you in the morning sessions and in the New York sessions with the signals. So where would be the signals on the 15-minute, touching those support and resistance levels? So the first point in the training is be selective with your time frames. You can't start with 10 time frames. I know, for instance, you might see me, or you might see Roy especially, flicking between the 5-minute, the 1 hour, the 6 hour, the 3-day, the weekly. Sure, we would move with a bit more agility between those time frames and be able to hold the information in those time frames switched on and alert in our heads all the time. But it takes practice to do so. Start with 4 time frames and then work up your to adding more intermediary ones, like the 6-hour or the 8-hour or the 12-hour or the 1 week. The better you consolidate those 4 time frames, the more you'll be able to add more easily and more how can I say confidently. With a lot more confidence, you'll be able to hold a great deal of information more confidently. The second point that I wanted to make, when you're trying to hold this piece of information, when you're trying to hold all of the time frames at the same time, is know where you are in each of the arcs, where the trend is. So if I'm looking at ETH, and I'm going to do this with ETH, if I'm looking at ETH on the daily, we have done a triple bottom here on the 1030 support and resistance line. I would say here on the daily, it looks like we're going up towards the 20. What's in front of me at the moment, you know, like above projections and everything else, what's in front of me is that this level of 1030 hasn't been broken, and we're at the moment going up to and towards the next level, which would be the 1250 and then the 1500. So that would be my first piece of information on the daily. Where am I on the daily? I've hit a bottom and I'm going up. My next question is, where am I on the 4-hour? On the 4-hour, it seems like I've come up and then I got rejected, and I seem to be in between, going up and down, literally. The stochastic is going up and the RSI, regular RSI, is going up. I can see there's a nice lift in momentum in the stochastic RSI and the regular one. We haven't yet crossed the 20, the 20 hasn't yet crossed over the 55 yet, so there's still hope that this might take off upwards. If I need a little bit more clarity on where I am on the 4-hour, this is something that the MAs could provide me with, because I can switch to the 4-hour and I can see, for instance, that the Bollinger is at the moment holding price action, and the price action is trying to find support, is trying to find support on the 50 MA. So until we find support on the 50 MA on the 4-hour, I'm not so confident about going up. I need that going up. Now, I will hold that piece of information and go to the 1-hour. am I on my 1 hour chart? Again, I've reached a level of support and resistance. I seem to have made, so if this were my 1 hour arc, I seem to have made a double top either here or here. So that's where, again, I'm a little bit confused as to what's going on. Has the double top been here and we've had the first drop and now we're coming up for mountain peak? Or have we already double topped and now we're coming down? Again, two possibilities, but what's in front of me at the moment is I've hit this support and resistance level. I seem to have the oscillators going up. It looks like the 1 hour is indeed going up. And now if I were to do a trade, I would look at the 15-minute. What's the 15-minute doing? Well, the 15-minute is doing great on the regular RSI, but the stochastic is at the top. So chances are when the stochastic is at the top, it wants to do a small correction and then head upwards. So I wouldn't enter a trade here until I have a nice clear signal on the stochastic coming down, and then move and then go with it as it travels upwards in a long. If I want to get a little bit more clarity on the 15-minute for my entry signal, I'll check to see what's going on here. So at the moment we have the 5 trying to cross over the 20 on the 15-minute. Again, that would be a good it would make the long a little bit stronger in intensity, so it would be nice to how can I say, to use that. It would be stronger to use that as a signal. But anyways, that's my thought process when I check it in the morning, and then when I check it for a particular trade. I go through all of those time frames and see where we're heading, what's the place where we are, what's the support and resistance, how's the MA situation, and where are we on the arc. And the arc is a little bit harder to gauge at the moment because we are coming down in large steps, and then we're going up in loads of sideways. So all of these are 5-minute arcs that are harder to read. However, it's not impossible. When we do see a triple top or a quadruple top situation as we have here, which was like 1, 2, 3, 4, 5, 6, 7, 8. Never seen a chain of tops so long. Literally, I have never seen it. Not even Ethereum. Again, it's impossible not to do a correction. So that's the second point that I was trying to make, is know the trend. Where is the trend on the day? Where is the trend on the 4 hour? Where is the trend on the 1 hour? Where is the trend on the 15-minute? And if you need to gain more clarity, the MAs will help you with that. The support and resistance, are we above or are we below? And then the MAs, how are the MAs supporting that? And then of course, for the signals, don't jump in until you have your oscillators going with you, your RSIs. Now, the third point that I wanted to make was about being selective with your indicators. As you can see, in order to keep the information on the multiple time frames in mind and in check, I am quite selective with the amount of indicators that I use. I have the volume almost on all my charts, especially the ones where I'm checking my my entries. For instance, on the 1 hour and the 4 hour. Again, it's good to see how is volume holding it. We have been quite constant in volume, no big news there. But again, when the market starts moving, you'll see it in volume. So if volume continues, for instance, where was it? Here, I think it was. we have prices going up, but volume actually coming down. So that's not a sustainable. This here and this here, volume is higher here than it is here. It's a volume divergence. Prices are going up, volume is going down. So it's a volume divergence. Be careful how many indicators you put on your pages, because there can be such a thing as too many indicators. And then again, memory is like a muscle. You need to train it to carry more weight. You can't give, a muscle of your body, there you go, 50 kilos, lift it up. It doesn't work like that. We need to build the strength of our memory. So I would keep the oscillators, the RSIs and the stochastic RSI, because they're incredibly valuable for immediate reaction on the stochastic, and more how can I say, less sensitive reaction on the regular one. But together they are beautiful as indicators, and also as indicators for signals when to go into a trade on the 15-minute, but also monitoring the direction of your trade. So that's the first one. The second one, volume. Have the volume so that you see what's going on, especially on the 1 hour and on the 1 hour, on the daily. I'm surprised I don't have it there. There it is. There's my daily with the volume. So on the 1 hour, on the daily, on the 4 hour, I don't pay attention to volume so much on the 15-minute, because that's where I take my signals. So I choose to have my signals chart a little less cluttered than with the volume. I choose to have the trader's reality indicator, so only one indicator in terms of, red light, green light. The trader's reality has vector candles that show me on the 15-minute when we have a possible reversal. And if I switch it on right now, here the purple vector here together with the red vector here, and here we've had 1, 2, 3 candles down for the down, and this is a stop volume, so this would indicate a reversal and move upwards. So again, I only have one such indicator. I used to have more, like I used to have the wave trend. I used the market cipher at some point. Again, I try not to be over reliant on them, because especially when the market moves like this with sudden big volume compared to the smaller previous move. So when the market makers kick in, the indicators tend to be a little bit more deceiving. So again, just the way you are selective with the time frames and you don't hold all of them at the same time, be selective with the amount of indicators that you use as well. Now, the big question is, why do we need so many time frames? Why do we need to hold the information from the indicators on the different time frames in our heads when we're making 15-minute signal decisions? Because when we have confluence between the direction on the day, on the 4 hour, on the 1 hour, on the 15-minute signals, that's when we have the higher probability trade. As traders, things can go both two ways, up or down, but we need to know which is the higher probability one, because that's going to give us the gains. That's where we're getting the gains. And secondly, why do we need to keep those the information from the daily or the 4 hourly in mind? Because they help us calculate the entries and the targets. So sometimes one trade, despite the pattern on the 1 hour showing us, oh, it can go to here, it can go to there, it won't go there because the day won't allow it to move more than that. So for instance, if we're not looking at there we go. I'll use Bitcoin for this. So if we're not looking at the daily information that we have on Bitcoin with the 20 MA at 22.6, saying, oh yeah, we're going to go to 25, but from where we are now, from 20 to 25, we can't we can't think of that step without looking at the levels on the 22. So for me, the 22K would be a level for DCA. Once we get above the 20 EMA on the daily, it's a good opportunity to DCA, to put a little bit more in the trade and consolidate my position in the long. Again, I wanted to give you I had a different example in mind. I'll tell you in a bit if I remember. Let me go to the MAs. I'll give it one more moment. If it comes to me, that's great. If it doesn't come to me, that's okay. I'm gonna move on. Let me go to the 4 hour. Yeah. I'm sorry guys, I lost my train of thought there. I wanted to show you an example where a daily limit or a 4 hour limit or a 4 hour for instance Bollinger, or a 4 hour support and resistance like this one that we're on, can limit the target of a trade. For instance, you're looking at this, or can confirm it, because I think this will confirm it. If you're measuring this and you're putting it down to breakout, you can see that it fits this level, this support and resistance level to a T, which is absolutely brilliant, because it's because the 4 hour level is supporting your pattern on the 1 hour. So again, it's an example of how things are in confluence and how important it is to look at where the 4 hour support and resistance would be, where the 4 hour, I don't know, 50 EMA or 20 EMA or 200 EMA would be, for you to map out your targets and your entries. So that's the main reason why we would need to hold those in mind. It's because we basically want to have more confluence and more precision in how highly probable a trade with its exits and its entry points is. Now, it takes practice and it takes time in the charts. So I think I was talking to Roy earlier on, and I said it to him. I think one of the greatest exercises that any trader can do is spend time looking at the charts, seeing how the charts progress, seeing how time frames move, how patterns meet their targets, how MAs act when they meet other MAs, and so on. So I'll give you an exercise to do. I'll also post it in the chart analysis section. And the exercise would be, have a look at one of your indicators on different time frames for, let's say, 3 days. Hold in mind the position, for instance, of the 20 EMA on the daily, on the 4 hourly, on the 1 hourly, on the 15 minute. Hold that in your mind and move through the time frames with that in your mind, and see how it is to hold that piece of information throughout your day and know where you are with reference to that. And take as many indicators as you have to and add them to your holding memory toolkit. So uh, uh, you might be staying with the 20 and the 55 EMA for 3 days. Take these 2 MAs. Then you might be staying with the direction of the swings for the next 3 days. Then you might be staying with, let's say, the stochastic RSI, for instance. It's very interesting what's happening now because the stochastic RSI on the daily is up high. How long will it be up high? But on the 4-hourly, on ETH, I'm talking about, I think it's at the bottom. Yes, coming up. Yeah, it's crossed up in the last hour. On the 1-hourly, I think it's coming up as well. Yes, and on the 15 is right at the top, and I think it needs to come down to the bottom and do a correction and then start heading up. So that would be the exercise that I would recommend you do after watching this training session. Hold one of your indicators on 4, max 5 time frames, and practice holding the position of price action with reference to that indicator for 2 days, for 3 days. After that, change to the next one, hold both of them, and see how demanding it is first, and then second, how it clarifies a lot of the questions that you had in your mind and a lot of the doubts that you had in your mind before starting a trade or while you are in a trade. So that's it for me. That's it from the training session. I hope it's useful, and I am looking forward to your practice and to your questions about it. And if you have any other topics that you'd like us to discuss, let me know, and we can arrange a training session, because I like the training sessions to address your specific training needs at the moment. Any questions, Michael?
Good suggested. I think you suggested a good 4 to work with for the day, the 4-hour, the 1-hour, and the 15-minute.
Yes. Yes. Again, it generally it goes. For instance, if you're trading on the 1-hour, you take your signals on the 15-minute, and the 4-hour and the daily are your background timeframes. That's the most common way to trade in terms of timeframes. Now, if you are trading if you're trading the 15-minute, taking your signals on the 5-minute, then your hour and your 4-hour are your background timeframes. But that means you still need to watch the daily for the general trend. So even if you take your signals on the 5-minute, it doesn't mean that the daily doesn't matter to you, because if you are, for instance, trading 15-minute swings on a red day, you would know that shorts are highly likely, whereas longs are less likely, or they might not meet their targets. So again, that would be the most common setup: 15-minute, 1-hour, 4 hours, and 1 day. And holding the oscillators, for instance, holding where the RSI is on the daily, on the 4-hour, on the 1-hour, on the 15-minute, constantly throughout the day, and seeing what happens when they are in confluence, when the 4 hours coming down, when the 1-hour is coming down, when the 15-minute is coming down, and when the day is coming down. What happens when they align, so to say.
Yeah, I've been working on that for a while with mostly with the stock, with the RSI2. If I do that with MAs and EMAs, I should just pick one MA, the same like the 20, and do it on all 4 time frames. Not 2 or 3 MAs, but just one at a time. The 20 on all 4, or the 55 on all 4, whatever.
Yeah, like there's a, how can I say it, Michael? Like there will be moments when one of them will take over. For instance, as we're looking, well, as I'm looking at the moment on Bitcoin, at this being a reversal. So if this is indeed a reversal going upwards, I would be I would expect to, for instance, see the MAs on the 15-minute and the 1 hour start heading up. How can I say, significantly before the 4 hour does that. And then when the 4 hour kicks in, something magical will happen. It's a bit like the stochastics as well. So when they align, when the MAs align in direction and they start going the same way, they, you know, the lift is higher, or you know, the, you get what I mean. I sort of like ran out of words.
It's to treat them, I'm treating the stochastics. The main thing I've been doing with moving averages is the direction that, you know, they're pointing, and also the lower time frames crossing over the higher time frames.
Yes.
Tends to, when the lower time frame goes down over the higher time frame, tends to be, we're heading down a little bit, or a lot, depending.
Yeah.
Vice versa. But that's the main thing. But I haven't tried to coordinate the EMAs and MAs on multiple time frames.
I think that would.
But you did that with the Bollinger Band too, right?
Yes.
That's another volume and.
You know, the Bollinger Bands are, I'll call them glorified MAs, but they're MAs. Like the midline of the Bollinger is the 20. For instance, this white line is the 20 MA. The MAs, I've been using the MAs a lot more recently because they're dynamic levels for me. So instead of having for instance, in today's trades, we have instead of having the 1250, we have the 1200 here for ETH. We have the for the 10 is 1180 rather than 1150. So they're more refined levels of support and resistance. They're more in tune with price action, and where and how we're moving right now, they help a lot more than I would normally use them. Where we are right now, again, my toolbox changes slightly depending on the stage in the market, because I think they're super to use at the moment, and holding them on different time frames makes such a difference. Let me go to the 1 day, because you see, very good. Yeah, I think that was one of the things that I wanted to show you, but I can't say for sure. I can't say for sure. The 10 on the day, it's at 1150. So even if, you know, I was looking at this wedge coming down on the 4 hour at 1050, but then I looked at the day and I said, no. If the 10 on the daily is at 1150, that's probably gonna be the support for that move. So holding what is the support and resistance on a particular time frame really makes a difference.
Right. Yeah, I've only been working with MAs for a little while, so I don't really understand the time frames with them, but I'll work on
it. How can I say it, Michael? Sometimes there's Yes, there's a lot to layer. Like when you layer the MAs, when you layer the channels, when you layer um the channels, the MAs, and the RSIs, to me, these three, and you can pick one RSI, the stochastic or the regular. They are, because you have momentum, which is the RSI, and then you have the spaced momentum is moving in. So they're very powerful. It's a simple, I think being selective and using less is more in this, using fewer indicators or fewer patterns is more powerful than trying to put everything in and having more questions than answers. Keeping the chart clean and how can I say, you're threading the information that you get. So the channel will give you a direction. The MA will give you a refined level in that direction, and then the RSI will give you a momentum and where that momentum is going. When you put only these three together, it will help you understand what's happening. Even as we are sideways, we can still read it. I hope that makes sense. I hope that makes sense. I think it will make.
Okay, so I have just a quick question. So one of the things, though channels and levels are relatively easy to find,
Yes.
I have a personal sort of, I really like them, which really is irrelevant because they're useful. But I don't like looking at them. I don't like looking at straight lines too much. The idea of these fixed blocks. But they're important. They're really important. But MAs are a dynamic
Yes.
riverbank, so to speak. They're dynamic riverbanks that are changing. I'm more comfortable with that. And it's good to know the other stuff. I mean, I really like looking at the Bollinger Band.
Yeah, well, the Bollinger Bands are a type of channel, Michael. Absolutely. Like, if.
But it's dynamic. That's why it's a lot easier for me to deal with.
Yes. Yeah, absolutely. Like, I think you're right to be intuitive in this. Like, I am very drawn to patterns and I'm very drawn to channels. And I had a hard time giving up my parallel channel to a channel drawn, by lines, because they're more dynamic. They reflect price action a lot more. I would get locked into a channel. Again, that's how my mind works. Yours works with MAs and with Bollingers. Bollingers are channels too. It's harder for me. Again, I haven't done it because I haven't traded Bollingers, but I use them as MAs. I use them as support and resistance. And I also use them very intuitively. When they're tighter, something's going to pop. When they're wider, we're going to have high volatility, but we're moving in a high range, so we don't know where we're going. We might be moving about. So that's how I again, it's a very simplified version of how they can be used compared to how I use my channels, my regular ascending and descending, that are I have a more disciplined approach to that. But yeah, they are perfectly fine. If you keep the Bollingers on the daily, on the 4 hour, on the 1 hour, on the 15-minute in mind, as in where are we on the Bollinger? Have we reached the top? Have we reached the midline? Are we on the midline? Generally, when we break the midline, we're going to go up. When we hold the midline, we're going to go the opposite direction. So for instance, here we went up to the midline, we reversed back, and we hit the bottom again. So they act as very dynamic support and resistance patterns. I could,
Right, and
I could.
I actually, my problem with the straight line version is my mind will too easily want to go, that's it, that's it, that's it, and then
Mhm.
stop watching and stop processing.
Yeah,
And actually, I need both of them because I get too all over the place. But I don't like the way the stagnation of the straight lines feel. You know,
I,
especially when the market's not moving enough anyway. It just feels so staticky. It's like, ah.
it's so
In,
true.
in any case, in any case, this is all very helpful, and you know, it takes time to integrate stuff. My frustration over the past few days is just the things I know that have been working over the past 2 days or so have suddenly stopped working.
Yeah,
And not even for a long time, but I just can't get any bearings. You know, it's like for a few weeks was able to, you know, get 30, 40 points, which isn't a lot, out of the $1,000 range, 1,100 range, whatever. That's still like, you know, maybe 3%, and pick it out, you know, all the time just based on the stochastics.
mm-hmm.
And then, you know, try to stay in if it looks like it's going further. But mostly I've just been ignoring the levels and mostly just trading on that. In the past few days, they've been so mixed and weird. It's just like, what's going on?
It's been
It's
very
just very
frustrating.
good, though. It's good because it's going to make me have to pay attention to more instead of getting to this one little piece of the puzzle.
Absolutely. Like there comes a moment where, for instance, I was talking to Roy about this, where I think it's good to just step back, because there is, for instance, like there's a big move, and again, this is a bigger time frame pattern that we've noticed. There's a big move, then there's the volatility that follows the big move, and when that volatility fades, when we start having 1 hour swings that move, even Bitcoin moved for 4 days in a 5% max, 4% range. There was nothing here to be traded, to my mind. Again, I'm not a scalper, but it here you would have gone crazy, because it doesn't even reach like, would you do like 2% swings? You're not even paying your fees of 2% swings if you don't pay, if you don't put some serious money in. So it was ridiculous, very, very frustrating. I went into a short here. The short that I left today was, I think, when it reached this double top here, and that was the only trade. But I stayed in. I stayed in for this mess and then this zigzaggy to take about 60% today profit. That was it for 4 days. So it's very frustrating, and it comes a period when something like this happens, and something like this happens before a big move. So right now I anticipate that we are again, something is about to move. Which way it's going to move, that's the big question. Is it going to come down and do a drop? And it's the same for ETH. Is it going to come down and do a drop to a second bottom at 18,000, 10%, which would be very nice, great to trade? Or is it going to go up from where it is to 25, which is a 23%? But there comes a moment, you're perfectly right to notice that, and it's good to live it. We've been with you in that frustration. Both of us have, super waiting to take profits yesterday and today, so that we're done with the trades and sit back and watch to see what's going to happen. Or we're not sitting back because we're still trading, but we're trading with a smaller position, carefully checking to see what it's doing, rather than having, as we had in these trades. Because here, when I went in full on, 100% position here, boom, excellent, because I was like, oh, double top, There it is. Happy days. So I get what you mean, Michael.
Another question. I just recall you saying, I think moving averages are like a combination of momentum and
Levels.
levels. I mean, levels
And momentum. Yeah.
combined.
Yes. I don't know where that piece of wisdom came from. It just came to me, and I realized that's what makes them dynamic, because they are both levels and they move with price action, so they show momentum.